But we have with us Abhishek Kapoor, who is the Group CEO at Puravankara, to talk to us about, of course, outside of Q4 and what trends he's seeing in the market, the latest with regard to the new launch. Talk to us, sir, about the new project that you've taken up. What's the kind of GDV, what's the kind of potential, timelines, margins, what's the expectation?
Firstly, thank you, Harsh and Mahima, for having me on the show. So the new project we're talking about is the Thane one, which we have acquired. We are looking at a GDV of 4,000 plus crores in this particular project. It's a residential project with attached retail. It's at a very, very prime location in Thane, a very well-developed location. So we are very excited with this entry into the Thane project. And we're looking forward to the launch as soon as we can.
Right. Mr. Kapoor, so Mahima also joining in. I want to understand that, with respect to this project, how does the funding look like? How are you going to source the funding from?
Look, Mahima, that's a good question. So what we're really doing is, if you see our cash flows, they are very robust. We have collected over 3,600 crores last year. And we have an operating surplus of about 1,270 odd crores with net operating surplus of more than 500 crores. So business itself is generating a lot of internal accruals. And of course, our debt is on a constant rotation because a lot of it is self-retiring. So a large amount of it is coming from within internal accruals. And wherever we require capital, of course, you heard about the HDFC platform. And we are looking at partnering with capital providers, which is equity-like in nature, and raise more capital for further acquisitions wherever required.
Got it. And Abhishek, how's the Mumbai projects really playing out for you? Because what we've been hearing is pricing in Mumbai is holding up very, very well. Talk to us about the latest trends, especially from the Bombay market. How's it playing out as of now? Because we had a report which came out sometime early this week, which was talking about pricing in Mumbai being, or rather sustaining.
Look, I believe that pricing in Mumbai will continue to sustain, and I would expect it to have a single-digit appreciation on an average annually. So it will remain stable, and in my view, it will sustain because demand-supply situation, the way it is today, is fairly balanced, and we are seeing continued traction in terms of absorption numbers. So my view on the depth of the market is very high, and we know we move volumes here, and this is one of the largest real estate markets in the country. So I'd like to believe that we'll continue to see that trend and it will remain stable. In fact, I personally believe that the volumes will continue to grow in this market.
Understood. Mr. Kapoor, on the financial aspect, of the company, as per Q3 FY24, your debt was around 1,700 crores, and Q4 it went to around 2,150 crores. So, I want to understand as to, going in FY25, what does the debt number look like, by the end of FY25, let's say?
See, look, I think I'll answer this question two parts. One is the way we look at debt is in context of the business that you're doing. If you look at our debt trends for last 4 years, our debt has come down from about 2,100 rupees a square foot to about 870 odd rupees a square foot on per square foot area under development basis. What I mean by that is that relative to the area which is under development, your debt per square foot is coming down, which means whatever interest savings you're having, you're adding to the bottom line. So that's point number one. Point number two is debt. There are two parts of debt. One is which is self-repaying, self-generating, where we have already launched the projects, and that's in excess of about 2,000 crores. So we see that continuous repayment will continue to happen from the project itself. Having said that, obviously new acquisitions will happen, and they will be done from a mix of internal accruals, and a lot of that will be where we are reallocating capital from one region to the other. So we will see a fairly balanced debt equity approach going forward. Having said that, I think what's very important is that over next 3 to 4 years timeline, we look at further optimizing our debt and bringing it down, which is the general trend that we are working towards. So I think over a period of time, over next 3 to 4 years, you will see significant bringing down of debt.
Okay, Abhishek, I want to again switch focus back on the latest project. 4,000 crore of GDV, how quickly do we launch? Of course, you've just about acquired a parcel as of now. So how quickly do we launch? And you know, where should we go in terms of the margins on this project and completion?
Look, so as far as the project is concerned, our target is from the date of deployment, all the projects we launch within 9 to 12 months. So our goal will remain the same. Target is to try and launch it within this financial year. So therefore, before March, that's the target we're working towards. Having said that, I think, as I said, our margins in the past also have always maintained is on an average across markets and regions for the group is at about 30%. Some may be lesser, some may be higher. But as far as this project is concerned, we believe that we will get to that target margin of about 30% here. EBITDA margin.
Sure. And Abhishek, what's the pipeline of launches in this year? How many launches are we looking at? And how many new projects, acquisitions are you looking at in terms of land acquisitions?
That's a good question. So this year we are looking at about 14 million square foot of launch already, which is in the pipeline. That obviously did not include Thane, so that will get added. Now, as far as the acquisition is concerned, if you see today, we have about 32 million square foot under construction. We have a balance of about another 31.5 million square foot, which is yet to be launched, of which we will take about 14 million to market. So approximately 22 million will be left with us. What we intend to do is replace what we have already sold, which is last year we sold about 7.35 million square foot. And this year we are, as of today, we are talking about 14 million square foot. So we need to replace that inventory and go back to 40 million square foot odd of land bank so that we can continue to grow. So our goal will be to acquire between 18 to 20 million square foot in this financial year and early next year.
Understood. One last quick question to you, Mr. Kapoor, that, you know, this 18 to 20 million square foot that you're planning to add, you know, your non-Bangalore projects now comprise of 47%. So going forward, what will be the mix like? Like, what kind of geographies are you planning to expand to? And geographical area-wise, what are the margins like?
Look, so I'll answer it in two parts. One is the geographic spread and the way we are looking at the business. Clearly, the focus is to scale up our West business. So eventually, next 3 to 4 years, you will see West contributing almost 40% of our business, and South, of course, we'll consolidate our position. But what you need to look at is in the context of the growth. So because our growth is going to be pretty fast paced, as you saw last year, we grew by about 90% in terms of pre-sales numbers. And we intend to continue to push the growth numbers in the consolidating market. So therefore, while we will scale up our West operations and the contribution will also continue to consolidate in the southern region. Now, as far as our projects, launches and geography is concerned, it will be literally between Bangalore, Chennai, Pune, Mumbai. We are working on Hyderabad, but yet to succeed there. And we are hoping to add NCR very soon.
Understood. It's been a pleasure chatting, Mr. Kapoor. Good speaking with you, good perspective. Thanks so much for coming in and speaking. Also, we'll slip into